What are good profit margins for independent insurance agencies? It depends. The size of your company, the product mix you have, where you operate in terms of estate, how many partners, a lot of variables impact how you perform from a margin standpoint or an income or profit standpoint. I'm going to give you some general ranges from high risk, average, high performer, and then what are likely considered a best in class. Again, some nuance, but let's talk through them. I would consider high risk any agency that's operating less than 10% margins. Why? Because one key client loss, one carrier loss, or change in the market could put your operations at risk to have to put you in a position to make some drastic decisions. I've worked with a number of agencies that end up in that place, and it's not something you want to be because you have to think about changing staffing, changing your technology stack. It just to maintain profitability or positive cash flow is not a good position. So even if you have a very aggressive tax avoidance strategy, operating at less than 10% margin is going to be a high risk category. Anything between 10 and 30% is considered average, a very wide range, but 10 to 30% is going to be average. That gives you the cushion to absorb some of that risk, but also have some flexibility, depends on if you're on the upper end of that spectrum, to continue investing in the company, to add to staffing, to invest in growth in certain areas so that you can continue to perform. I always recommend, as a CFO or a financial consultant working with agencies, operating profit between 15 and 20%. Again, that's going to give you the margin to have good owner benefit as long as you're paying yourself well as the ability to be able to continue to invest in certain areas and not take on too much risk and have to make drastic decisions. Anything above 30% is actually considered high performing. There are definitely some nuance based on your corporate structure as an LLC or an S Corp or whatever, and how you may pay yourself. But operating above 30% is usually considered a high performer. This is usually agencies that are going to be single owner operator or single principal and might not be paying that much commission to staff in terms of how they have their comp plan set up. Again, business model is going to very influence how you perform. Anything above 40% is definitely possible. There are agencies that focus on niche markets or certain products that are able to operate at a 40% clean margin and continue to grow. That's one of the other factors is operating at a good margin is good, but factoring in agency growth and how you can continue to invest is one of the main things that I would encourage you to consider. So balancing profit and growth is something that's very important as you continue to build long-term value. So what are good profit margins? Quick recap. 10%, high risk. 10 to 30% is going to be average in most cases, but you want to be on the higher end if you can. Above 30 is considered a high performer. And there are some models based on specialty products, specialty experience, or very efficient servicing that can operate above 40%.